I am Vinod Kumar. I have done my MBA Finance and Marketing at TAPI Management Institute, Manipal, about 15 years ago. And then I worked for a few companies like Godrej Pillsbury. I worked for Ruchi Oils. And I had been involved with this capital market since 15 years. And I had been into this profession completely from the last 8 years. In this span of 8 years, I had been training a lot of people with regard to certifications and with regard to technical analysis which are related to stock market operations and opportunities in the capital market segments. We run an institute where we focus our training on capital market certifications, technical analysis, and chartered market technician training. Chartered market technician is a preparatory course which is done to achieve a certification which is internationally recognized all over the world. This contains 3 levels which has to be completed by the person. So these are the 3 basic areas which are like this: NCFM certifications, that is NSE certification in financial markets, technical analysis, and chartered market technician. Fine. This program is aimed at capital market certifications, basically are NSE certifications in financial markets. There are a lot of modules in NCFM certifications, out of which the capital market dealer module is one of the very popular and basic mandatory for people who want to work in this particular capital market segment, who want to establish in this particular capital market segment. So to establish in this particular capital market segment, people who are interested, they need to get to know things about the capital market operations, the various segments, the acts involved, the terminal operations, and certain fundamental concepts. These things are all framed in capital markets dealer market modules. Now, we will be discussing everything about capital market dealers module in this particular program. The basic concepts which we will be taking up in this particular capital market dealer module are: 1. Overview of the Indian securities market, 2. Trading membership, 3. Trading, 4. Clearing and settlement, 5. Legal framework, and fundamental valuation concepts. So these are the 6 topics, 6 areas we will be focusing in this particular module. Now, since this has got certain examination which we have to face to achieve or clear this particular certification exam, we need to understand the weightages for each and every topic. For the first topic of overview of the Indian securities market, the weightage in the examination is 10%. For the second chapter, trading membership, the weightage is 20%. The third chapter, trading, has got a weightage of 30%. And fourth chapter, clearing and settlement, has a weightage of 25%. And finally, the fifth chapter, legal framework, has 9%, and fundamental valuation concepts has 6% weightage. So we need to focus the first 4 chapters more rigorously to enable to understand not only the important aspects about capital markets, but also from the examination point of view. Now, we will get into all these topics one by one. Presently, we will take up the first chapter, the overview of Indian securities market. To generally understand about the securities market, we need to know that there is two type of markets. One is the primary market, other one is the secondary market. Primary market is a segment where the companies or the issuer will be issuing certain securities to the investors. That can be the retailers, that can be the institutions who are investing in this particular company. Finally, once these securities are issued, they are being traded in the secondary market segment, where stock exchanges are involved. There are a lot of participants in this particular securities market, like issuers, investors, etc. Now, issuers are people who will be issuing the securities. Investors are people who are investing, expecting certain better return on their investment in these companies or whoever is issuing these securities for the purpose of gain. And there are so many intermediaries involved in this particular securities market who provide the services of issuing the shares, buying the shares, selling the shares, operational issues, so many other aspects. There are exchanges, there are lead managers, there are merchant bankers, there are brokers, there are sub-brokers, mutual funds. So many people are involved in this particular securities market. So what we are going to do in this particular topic of overview of securities market is trying to understand the various segments in this particular securities market and in detail about various operations which are going to take place in this particular capital market segment. Now, securities provide a channel for allocation of savings to those who have a productive use or productive need for them. The securities market has two interdependent and inseparable segments. These two segments are the primary market segment and the secondary market segment. The primary market provides opportunity to the issuers of securities, both it can be government, it can be corporations, to raise resources to meet the requirements of investment. Securities in the form of equity or securities in the form of debt. The equity constitutes the shares, the debt constitutes the bonds. That can be issued in domestic as well as international market at face value with a discount or with a premium. The primary market issuance is done through public issues or even through private issues. That means the shares, the securities or debt instruments which are being issued can be done through public issues or through private placements. Under Companies Act of 1956, an issue is referred as public if it results in allotment of securities to more than 50 investors. However, when the issuer makes this issue of securities to a select group of persons not exceeding 40 and which is neither a rights issue nor a public issue, is called a private placement. Okay? So, there is a public issue and a private placement. Secondary market, this is a key element. Secondary market refers to a market where securities are traded after being offered to the public in the primary market and are listed on the stock exchange. That means once the issue is being completed in the primary market segment, they are sent to stock exchanges like National Stock Exchange and Bombay Stock Exchange, where they are being bought or sold by general investors. In this particular secondary market, there are three segments: equity segment, derivative segment, debt segment. The secondary market is operated through two mediums. One is the over the counter market and exchange trade market. OTC markets are generally informal markets where trades are negotiated. Now, let us try to understand the key indicators of securities market. The first and primary point is the index. The second is market capitalization. Third, the market capitalization ratio. Fourth, the turnover. Fifth, the turnover ratio. So these all are certain key indicators in the securities market. Now let us try to understand one by one. What is an index? An index is used to give information about the price movements of the various products in the financial, commodities or any other markets. Stock market indices are meant to capture the overall behavior of the equity markets. The stock market index is created by selecting a group of well-to-do companies or stocks that are representative of the whole market segment or a specified sector or a segment of a particular market. The blue chip index of National Stock Exchange is S&P CNX Nifty. It stands for Standard and Poor CRISIL NSE Index of Nifty. Market capitalization. Market capitalization is defined as value of the listed shares on the country's exchanges. How do I understand the value of these particular companies? It is computed on a daily basis. Market capitalization of a particular company on a particular day can be computed as the product of the number of shares outstanding and the closing price of that particular share or stock. Here the number of outstanding shares refers to the issue size of that particular stock. So market capitalization is equal to closing price of a share into number of outstanding shares. Similarly, to compute market capitalization of all companies listed on an exchange like National Stock Exchange, we aggregate, that is we total the market capitalization of each and every company totally, completely. That is aggregate the market capitalization of all the companies traded on that particular exchange. Now, market capitalization ratio. The market capitalization ratio is defined as market capitalization of the stocks divided by GDP. It is used as a measure of the stock market size with respect to the total economy GDP. Now, coming to the turnover. Turnover for a share is computed by multiplying the traded quantity with the price at which the trade takes place. Similarly, to compute turnover of the companies listed at the exchange, we aggregate the traded value of all the companies traded on that particular exchange. Now, the turnover ratio. The turnover ratio is defined as total value of shares traded on a country stock exchange for a particular period divided by the market capitalization at the end of the period. It is used as a measure of trading activity or a measure of liquidity in this particular stock market. So turnover ratio is equal to turnover at exchange divided by market capitalization at this particular exchange. So these are the key indicators of a particular securities market, product and participant. In this securities market, what are the various products and who are the participants in this securities market? Let us try to now discuss. The general products which are in this particular securities markets are shares, bonds, debentures, etc. And the participants generally in this are investors, merchant bankers, etc. Now we will try to see these in little more details. Financial markets are the markets where it facilitates reallocation of savings from the hands of the savers, those are the investors, to the hands of the entrepreneurs who are starting certain companies or organizations or projects. Savings are linked to investments in a variety of intermediaries through a range of complex financial products which are called securities. Under the Securities Contracts Regulation Act of 1956, securities include first category securities, bonds, scrips, stocks or other marketable securities of like nature or of an incorporate company or body corporate. 2. Government securities. 3. Derivatives of securities. 4. Units of objective investment scheme. And the fifth category of products are interest and rights in securities and security receipts or any other instrument so declared by central government. Broadly, securities can be of three categories: equities, debt securities and derivatives. Now coming to participants, who are the people who are involved in this particular securities market? Broadly, they are investors who are investing in this particular companies, issuers who are issuing these securities, then intermediaries who are providing certain services in the process of issue of shares or in the process of investments or in the process of selling or offering these securities in this particular securities market. Now, broadly we can list these market participants in India as follows. Investors. In investors, it can be individual investors, it can be corporate investors, it can be foreign venture capital investors, it can be FIIs. Then there can be depositories who provide demat account and transfer of securities. Stock exchanges like NSE and BSE, with equities trading, with debt market trading, with derivative market trading and with currency derivative trading. So stock exchanges are another participant who can provide trading in these segments. Brokers, corporate brokers, then sub brokers, portfolio managers, custodians, registrars to an issue and share transfer agents, the primary dealers, merchant bankers, bankers to the issue, debenture trustees, underwriters, venture capital funds, mutual funds and collective investment schemes. So these are various participants in this particular securities market. Most of these people activities and their establishments, how they are carried out in this particular securities market, we will be looking at them at a later topics. Now, in this particular securities market, what are the various segments for which trading is allowed or buying and selling or transactions are allowed?